Hey folks, welcome back. If you happen to be a first-time visitor, why not subscribe? That way you can keep up to date with my videos. I definitely try to give some value content here and there. I'm sure there might be a nugget or two you can pick up for your own trading in the future. Also, please click the notification bell, and of course a like and no comment would be appreciated. Now let's get into it. I wanted to give you a sneak peek of the strategy I intend to use next week to reach my profit goal, and also tell you a little bit about how it works. If we get to 100 subscribers, I plan on going more into detail and maybe even release it to you guys. And no worries, I have several strategies I will release for free in the near future, so I'm sure there will be something for everyone. Alright, so here we are on the MT4 trading software. Let's go with the actual chart first, top part. I utilize a volatility-based ATR band. This band tends to contain price pretty well, even though sometimes price does come out of the band, as you can see here or here. And you need to think of it as a rubber band. When price tries to break out of the band and stretches it, you can see a stretch right here, this band tends to snap back and price with it. So this is the basic principle of the system. On the bottom of the chart, you can see several indicators I use as filters to help me decide quickly if I should take a trade setup or not. You can't just blindly take any breakout of the band. For example, here you can see price comes out, but it doesn't really go far and then continues down. Also, a big help is if you look at the slope of the band, the direction, and you can, here in this case, you can see it's clearly going down. So you really don't want to take a long here, because chances are that it will continue downwards. So that alone already helps a little bit. Let's go into an example. I think that's the easiest. We can see here price comes out and it stretches the band pretty nicely. So that's almost a dream setup here. And then you can see I'm getting my sell arrow. Now I have to say the sell arrow comes several times. You can see this here, and the buy arrows on the bottom. And they also tend to repaint, so you can't just go by that. But that's where my filters come into play. So we can see here I get a sell signal. Price came out of the band, which is fantastic. That's what I'm looking for. And then I look down, and you can see here, if you go on the candle here, that this is full on red, meaning that we're in a strong downtrend. That's a momentum indicator. Here's a trend indicator that also shows us big red, so we're definitely going the right direction. And all I'm waiting now is basically the Heikin-Ashi candle to switch to gray, which is my red. I just don't like the green and red candles. I use blue for bullish and gray for bearish candle, and we get this here. So that's our next confirmation. And now we need to have those two indicators to agree to, the bottom ones, and we get this here, and we have to wait for the candle close. So our entry would be here on the close of this candle. Let me put a line here so it's easier for you to see. So here would be my entry. My stop loss goes about one arrow length above the arrow or the price, whichever one is higher. In this case the arrow is higher, so right about here would be my stop loss. And my exit would be when this bottom indicator starts to turn to green, and I get my scissors, which is an exit indicator that I use. So my exit would be right here. Let's put another line here. So this is where I would exit the trade. Now I do have additional rules in place. It's not just that simple. So don't think of it like, oh yeah, that's too simple, that can work well, or whatever. I have added some more rules to it that help me filter out trades that I shouldn't take. So that's also in place, but I don't want to go into much detail about that. But for one example, I also have a rule that when price comes out of the band on the other side, like here, that I close the trade. Now this is a little bit premature, and you can see everything's full on red here, and price probably will continue down. But then also your inner sight comes into play, basically, because even though you know your indicators telling you stay in the trade, you can see this pullback, and that's 120 something pips. So it's a pretty massive pullback, and it's kind of hard to deal with that, even though, you know, I can trust my indicators. But then also, if you look here, if you exit anywhere here, and then look here, it's not that much further down to where you exit, but you have to sit through all those candles to get a few more pips. So to me, it's not really worth it. That's already a good deal getting out here. And as they say, don't be too greedy. Take what the market gives you. And let's take a look here. My stop loss was, now this is gold, so keep that in mind. That's a pretty volatile pair. My stop loss was 124 pips here, and my exit, if I exit right around here somewhere, 260, 70 pips. So it's a pretty good risk-reward ratio. It's about a 1 to 2. But then you get other trades too that, you know, keep you in it for longer, and you get a much better risk-reward ratio. I don't know, let's go back a little bit. Yeah, this indicator also shows you, you know, when a reversal takes place. So this is basically the end of an uptrend here, and we're in a short-term downtrend, which is already over here. So now we're going back into an uptrend. It's very typical for gold. It's tough to sell gold. We get rid of those entry lines from before so you can see better. 1 second, here we go. So we had a reversal here. We can see that the indicator switches from under the zero line to over the zero line, kind of like what the MACD does. It's just a different kind of indicator. And here we get our first entry. Now I wouldn't take that because I want to see price clearly go into the green before I take a buy, or clearly go into the red before I take a sell. So I probably wouldn't take that, and as you can see, we already get the exit indication here. Now I'm not saying this would not be a profitable trade. It would be just a small trade, and like I said, I have my rules in place for a reason. So I would not take this trade. Same here, price is nowhere near the green. Now we get price going into the red here, but if we look down, even though this says okay, we have a change of direction, look at this one. This is like full on green. There's like 2 levels above zero, and it's above both levels. So no, I would not take this trade. It's just against the trend, and as you know, the trend is your friend. And would it have worked? Yes, it would have. But see, it's just another small trade. But now let's look at this one here. This is where I get interested. We can see the slope of the band clearly going up right here. We get our change of direction support indicator that tells us, okay, something is changing here. Then we get our arrow, which is a must before I take a trade. And that's also an arrow that I have on my watch list. I have a second MT4 instant open with all the pairs that I trade, where I get an alert whenever that arrow appears. Now obviously you can't take any arrow, but I would have gotten an alert here. So, and then I check out the chart and look down. Okay, we just hit the green here. This is full on green. Now we have to wait for those two, and look at this. Beautiful. Green, green, full on green. This is just switching over. So your entry would be here. If you want to be conservative, because this arrow does repaint, you can wait one candle. It's really not that big of a deal. Don't ever feel like you're missing out, because that's, what is that, like a few pips. So don't worry about it. To be sure, maybe wait until this candle closes here, this entry candle, just to make sure that arrow stays in place, and then enter the trade here. So let me put a line here just so you see. So I would enter right here on the close of this candle. Oh, I'm sorry. Up here, he said. I apologize. So right about here. That's good. My stop loss again goes one arrow length, either above the arrow or above, below the arrow or below the price, depending on which is lower. In this case, the price is lower than the arrow, so my stop loss would be right around here to be safe, especially on gold. And we go up here, and here we get our exit indication. But if you look down here, this stays green. It never turns red like here. So you stay in the trade, and then it goes sideways for a little bit, goes back into the green, and we get a continuation signal. We're still in the trade, and then it just takes off. Now, are we exiting here? No, price doesn't come out of the band, and we don't get an exit indicator, and this down here is still full on green. So you can exit here. It's not a bad place. Again, that's only a few, what is it, like 20, 30 something pips to the actual exit. So you have to decide if that's worth it for you to sit through, what is that, a little bit over an hour and a nice pullback. It's up for you to decide. I mean, again, my personal philosophy is don't be greedy. I mean, this is already, as you can see, this is your risk. And if you exit here, you got at least 3.5 times, 4 times your risk already. So there's no reason to stay in it. But if you want to stay in it, the indicator says here, nope, we're not done. Then you sit through that pullback, and it continues up. And here we get our exit indication. So the first exit indication is that we're turning right here. And if we don't have the scissors already, we wait for them to appear, which happens here, and then we exit. So this would be the ideal trade if you stay in it for that long, if you can handle it psychologically. So let's say here's your exit, and let's see what that was. That was about a 54 pip stop loss, and you would have taken 218 pips. So definitely more than 4 times your, about 4 times your risk. So that's definitely a good risk reward ratio. And that's why I said I would not trade against the trend, like here, from here down to here. Yes, it will work, but your risk reward is not that good, and chances are that the trade just won't work out because you're going against the trend. So you got to put the chances in your favor, and if you see that the trend is clearly up, which the band is telling you, don't go against it. And here you get a nice little trade. And what is that, from here to here? That's 73 candles. Let me take my calculator. 73 candles times 5 minutes divided by 60. So it's about 6 hours, and you make 4 times your risk. I usually risk 2%, so that trade would have given me over 8% in profit in just 6 hours. And 8%, that's pretty good. You know, I know people that are happy to get 10% in a month. But again, I'm trying to get through the FTMO challenge. That's why I'm working on this strategy and trying to make it as profitable as I can. And yeah, here we are. What else is there to say? Let me think for a second. Yeah, that's basically it in a nutshell. So again, of course, there's some more detailed rules are added to it. For example, time of day to trade. As I already said, only take trades when price is clearly in the green and clearly in the red. So like here, where was it? Yeah, see it like this here. Price barely even touches the band, so I don't touch it. Now here, this is what I want to see. Price coming even out of the band. That's where I get really interested. Would I have taken this trade? Let's check. We get the entry signal here, and then we wait here. Yep, just made it. You can see I won't take a trade unless this indicator shows that it's within the lines, which it happened to be on this candle. This just turned white. That's a go for me too. And then we have the two bottom indicators turning green too. So yes, I would have taken this trade. Stop loss goes right underneath here, and then exit is right here. So this was a small trade, but even that, what is that, 60, and you make about 80 pips. So it's a little bit over 1-to-1, but still you make your money. You know, make your 2.5% here. It's not too bad, and it's quick. That's, what was it, about an hour? Let's see, 24 candles, a little bit over an hour, so not too bad. But here, for example, if you see this here, yeah, this is nowhere near the band, so I don't touch it. Plus I like to take the trades when I actually get the resistance here, not the exit indicator, because this indicator for some reason identifies if there's a downtrend or uptrend and gives you a signal depending on that. So if you get the scissors, you know that's just an exit, don't enter. But when you get the actual resistance, that's the same indicator, you know that the trend continues. So it has to build in somehow. I don't know exactly how it works, I just know it works. Now, would I have entered here to go down? No. As you can see, it just went into the red for a brief moment here. I'm not interested in it. I'm only looking for this here or this here. That's my ideal trade setup. And you know, people always tend to, oh, I need to be in a trade, I need to be in a trade. But I've learned that you need to be patient and wait for your setup to come to you. That's very important. You know, if the trade setup is not there or not 100% there, and you're kind of like, yeah, I'm not so sure about it, don't take the trade. Wait for the next one. And you can see, here's the next one. And it didn't even take that long. So you need to be patient in your trading. Exercise patience. Be strict with your rules. Be strict with your discipline. Very important. And of course, you gotta be strict with your risk management. Always have a stop loss. Now, I don't have a fixed take profit target. I just go with my indicators, which usually tend to give me way more than a 1 to 3, which is what most traders look for that shoot higher. You know, some people only go for 1 to 1.5. Some people go to go for 1 to 2. Some rare traders go for 1 to 3. I tend to get, you know, somewhere about 1 to 3 to 1 to 5 on average with this strategy. Some trades, I had one a couple of months ago where I actually made a 1 to 10. It just kept going and going. So why would I get out after a 3 or profit target? If I can tell that the price is continuing up, you know, let your winners run. That's what I do. And that's where this indicator helps me. It also helps me to cut a trade short, like here, when there's just nothing left. You know, get out. There's no shame in getting out, taking your profit, and then just wait for the next trade setup. Again, I wouldn't have taken this. I wouldn't have taken this. But then you can see the price goes down, and boom, here we go. Right into the red, comes even out of the red. And we already had the indicator saying, okay, this is probably going down now. And here's your confirmation. The band stretches, price comes out, and I mean, just look at this. It's not even an hour, and that's what, 300, almost 400 pips. You know, that's the kind of trades that I want to take, and I'll wait for those. Yeah, this was Friday. Also, yeah, here's a nice setup. You can see you have the exit indicator. Now, I said before that I probably wouldn't take a trade based on the scissors, because for some reason that indicator has a tendency to determine the trend. So if I get the scissors, the indicator says we're going further down. But if you look down here, you can see that we already switched to green. This is already in the white, and we get our confirmation down here. We get a Heikin-Ashi candy in blue, which is my bullish candle. So everything works here. I still wouldn't have taken the trade though. Why? Can you guess? Well, this was Friday, right before the market closes, so I don't take trades on Friday afternoon. But in general, this would have been a good setup. You would enter here, and then here's your exit. And this was a nice little trade before the market closed. I just wouldn't have taken it. Anyway, this is a very simple down version of my 1 hour strategy that I normally use, but it's visually easier to identify when you only have a moment to make a decision. On a 1 hour chart, I have more filters I use, but you also have plenty of time to analyze the chart before making a decision to possibly enter the trade. That was my struggle last week. So that's why I came up with this. You know, it's very easy to identify, is a trade good or not. All it takes is one look, and you look down and you see if you get the confirmations. If not, you wait a candle. Do I get the confirmations now? And if so, enter the trade. It tells you exactly where to put your stop loss, which is about an arrow length underneath the lowest point, either lowest price or the arrow, whichever one is lower. And it tells you exactly when to get out, so there's really not much thinking to do. And that's important if you go on a 5-minute chart and you have to make decisions on a whim, you know. And that was my downfall last week. So that's why I came up with this. So let me know in the comments what you think about this template. Also, hey, why don't you let me know where you are in your trading? You know, did you just start out? Are you already a successful and profitable trader? If you have questions or suggestions, please leave them. I wouldn't mind having a few comments on the video. I don't mind good or bad, as long as it's constructive criticism. I have no problem with that. After all, I'm still learning too, just like all you guys. And that's it for this video. I know I was rambling a little bit back and forth, but I tend to do that. I apologize. I hope you enjoyed my content and give me a like. And again, subscribe if you haven't. And I'll see you in the next one. Have a great weekend. Thanks for watching.